All right, hey, what's up, guys? This is a quick video about some real estate stuff. I did a couple videos I haven't uploaded. I took a week off, kind of, but I want to make sure what I'm sharing has some relevance to my life and things that I'm actually practicing well or not so well, because they're good life lessons there or comparisons to your own day-to-day life and planning, throughout these different economic downturns and things that are happening. So I talked about gold, precious metal, and some of the things I've been kind of doing there, just trying to buy a little bit there. I'm always very, very eager to look for these real estate deals, but one of the things that I've been thinking about, I was talking to a couple guys recently, quite a few actually. For the past few weeks, I probably talked to 4 or 5 people in depth about my opinion on why they should probably look to buy something that makes sense for them. Now, these people are renting, and they have excellent credit that I can remember. They have money, or they have access to money, big lines of credit or cash, and their hesitation was the rates and overpaying. And what I thought is, well, aren't you guys paying $3,000-$4,000 in rent? Which they were, $2,500 to $3,500 a month. And they're like, yeah. And in my opinion is even if they overpay for a property, depending where it is, and even though the rate might be higher, that saying has been sticking with me this past month from Bigger Pockets. David Green was mentioning, hey, when was the best time to buy? And that was today or 10 years ago. Well, obviously 10 years ago, if you bought a property, you're probably in a good place where you're looking at when you bought it 10 years ago to today. And if you buy it today and 10 years from now, you're going to look back and go, oh, there's always a reason not to buy something, but you got to find a way to make it work. So if it doesn't work, if it doesn't make sense, obviously you don't want to get in over your head. And what I mean make it work is if you're already paying $2,000, $3,000, $4,000 a month anyway, and you can get into a property that you own and you're going to pay $2,000, $3,000, $4,000 a month, at least you have some future equity, right? You have some write-offs there. Potentially, if you could rent out a room, or if it's a multifamily or a duplex, you could offset some of that expense. I mean, that's the way I look at it. Maybe I'm wrong, but you could refinance a loan later if the rates come down. I don't know if they'll come back down to 2 or 3%, but hopefully they'll get back to 4 or 5 at some point. Certainly, right now I think they're around 7, right, 6 or 7% easily. So when I look at one of the properties, I mean, not like I have hundreds of properties, but a primary residence that we live in, we bought with the idea of either flipping it or maybe renting it out, because it's kind of a split level with a partially finished in-law. Well, yeah, partially finished in-law. And it had a lot of appeal to us for personal use with some future utility to be able to kind of store some stuff, some for some business stuff that we do, as well as rent out some space there and cover the expense, as well as maybe make a profit. And I still feel that specific property is in good shape. So it does need some work. Good shape meaning like the property value, the location, the functionality of the property is very good. It's very desirable. It does need some work. It probably needs, realistically, a couple $100,000, between siding and gutters and some landscape stuff and interior stuff, kitchen remodel, they add up, and before you know it, it's easy to spend $100,000-$200,000 depending on the material and labor and that type of thing. But still, fantastic property. I think it was a great buy. Throughout the past 5 years on that particular property, just using that as an example, there's been a couple points where we're like, maybe we should sell. And any of those points that we were going to sell, we would have made money. It makes me think of Bitcoin. It makes me think of a stock that you might have owned if you're an investor, where you buy it and then you could sell it for more than you bought it for. So if I was buying a property for 100, obviously this wasn't 100,000, but if I bought it for 100,000 and then I could sell it for 120, right? Then I'm like, wow, I'm making a profit, or 130, right? And you're like, wow, that's a pretty good profit. It's 30%. So I hesitated twice in those time frames because I felt like the realtor was trying to take advantage of us. I'm not a real estate expert, but I've been in sales for 25 years, and I can pick up on some things that that maybe some people wouldn't. Certain word tracks, right? Certain things, the way people speak, their body language, their facial expressions, their tone of voice, combination of those things. And the first time the person was asking questions about our personal life, where we were at, what was going on. And I felt like they were fishing for information to use for leverage to their advantage, regardless if they portrayed that, and then tell us what they think they could get for the property. Now, I know for a fact that people that are in real estate, are also buyers, and they have access to other people that could say, hey, this property's coming up. Whether it's right or wrong, that happens all the time. So if a property comes up and they could say, wow, we could really take advantage here, then sometimes people will move in, which I understand it. I get it. But I picked up on it, and I told the person, their offer, even though it was more than what we bought the property for, which was, a couple years into it, I was like, nah, I think we'll hold on to it. And I'm glad we did, so it had gone up. I don't know what the percentage is, but it had gone up quite a bit from that person saying, I think I could sell the property for this. And then we waited again, and then during the high point of the pandemic and stuff, when the property values were up, we thought, hey, maybe we should sell it now. And again, it was almost, I don't want to say, well, I have to figure out the percentages, but it was about a couple $100,000 more than what the person a few years before had said. A couple $100,000 more. Now, imagine that we had sold it 2 years before that, and then just 2 years later, basically went up $200,000 more than what we were entertaining. But even then, I thought, I feel even it was the same type of vibe where I feel like this person is giving me the sign that there's more money here, because I know what the market is around us. I know what other houses are going for, and I know what needs to be done to this house and what it would be worth. So I'm looking at square footage, the yard, garage space, location, all these different factors where it would be appealing to somebody that wanted to come in, whether it was an investor or a family, or if you're going to rent it out. So I waited again. I said no. I still think we should hold on to it. And my biggest influence was really the rates. The rate on our primary residence, I think, is 2.7 or 2.8%, which is really low. And I know people that are lower than that, and I know people a little bit higher than that, but I don't know if we'll see that again. I don't. And for this specific property, I think it's advantageous to hold the property regardless. And even though I like to toy with, well, what's it worth? Because, if somebody comes in and said, hey, I'll pay you some obscene amount of money, then you kind of go, all right, well, if I could take that money and put it somewhere else to work for me, I can't get hung up on just that low interest rate. I have to really think it through before you make an impulsive decision. But sometimes certain deals will come up that just you can't pass up. But I haven't had that yet. Well, we waited, and now they built the house across the street. I might have mentioned this. And across the street, the house, I think I also mentioned, is about a third of the size, with no garage, no yard. And the house sold for $825,000, $25,000 over asking price. In this crazy market, which is, from some of the information I said, is not in a good place for the real estate market, meaning it's unwinding. The sales are dropping. Houses are staying on the market in certain places in the United States for far longer. It's no longer those couple days, couple weeks. Now it's turning into 30, 60 days plus. And the builders, their backlog is starting to dwindle, right? So there's things happening out there that are affecting the housing market. But still, where we are in the New England market, houses are being built, properties are being bought, and they're being purchased before they're even completed, which is very interesting to me. These houses are not even done, and they're selling over asking price. I don't know. So the way it affects me personally is that now, because it's across the street, will impact the value of the home that we have. Hey, 10 years from now, going back to that earlier statement, that particular property, whether I'm around or not, God willing I am, but that is a good portfolio asset to have, because the debt will be lower because it's such a low rate and we've been paying it, even if I'm renting it out at that time. The appreciation of the value is much higher than a lot of these other areas, and it's just accelerating so fast. And I think it's because of the area, which is the Boston market. Like, all these places around this area are growing, they're more affluent, and meaning people want to move there. The job market is desirable. People from different cultures and ethnicities are coming in, and that recipe exists in a lot of different places throughout the United States and in the world, which kind of drives up the price of the real estate, I think. So the reason I'm sharing this with you is, as you're trying to figure out, where do I put my money? Where is a good place to invest? Which there is no guarantees, quite honestly. You put it in the bank could collapse, right? You could put it into Bitcoin or cryptocurrencies, that could collapse. Stock market could crash. I mean, there's really no place where there's any guarantee. There's just probably the probabilities of one holding its value or staying more stable than the other. For me, I still believe that if you are going to invest in something, be patient, look at your situation. Like, what am I already spending? I'm already spending X amount a month, if you are spending anything. Most people that I know pay a rent or a mortgage for where they live. Most people. Some people do not, because they are renting out a floor or a side or a condo. They own the condominium plex. But anyway, whatever the case is whether you're paying a monthly fee or not, like meaning a mortgage or a rent, it's an expense, a liability that you have to pay. So why not own the property? I mean, you could tell me otherwise. I know that Grant Cardone says, no, that's stupid. Then you're a slave. The bank owns you. I'm like, well, if you're renting, then I'm paying you. I'm paying your debt down. You're winning, right? So I'd rather own it myself. I've never gone wrong yet in my 49 years of living, of having real estate, which of the properties I've owned, I've come up on every one of them. I can't think of one time, even with the downturns, even with the tenants didn't pay, even with the fix repairs maintenance that I've had to do in the properties, I've still come up huge on every single property. Huge. I mean, massively. So, and that usually through long-term ownership of 10 years, right? And if I looked at a stock, if I was going to buy into a stock of some kind, like Tesla, I kind of think maybe it's the same, 10 years. I can't tell you, other than a 401k type of thing, I've never owned a stock for 10 years, but that's a different topic. All right, I hope that kind of helps. That's kind of what I'm thinking about today when I think about this real estate market and things that are going on, using my own personal place of primary residence. And should I sell? What I want to buy? Or do I want to take the money and reinvest it? Do I want to buy more real estate? Yes, but it's got to make sense. The numbers got to match. If I have X amount of extra cash available, where can it best be used and allocated where I'm going to be profitable, even with the risks? All right, I'll see you guys next time.